Hey gang, Nate Bear here, lead technical tactician for Monument Traders Alliance and trade of the day. And in today's video, I've got really two charts that I want to show you. And this may shock some of you, but I am starting to look at the downside here. Okay, so let's dive right in. Let me pull up my charts. And this is the SPX. The first thing I want to show you, and if you've been following along, we've sort of been covering this every week. And that is the weekly squeeze down here, which has fired to the long side. And at this point, it's sort of losing momentum. We sort of came up, we couldn't break over 4,200, and the momentum is rolling back lower. And we're actually entering a new weekly squeeze, a fresh weekly squeeze on the SPX. So what that tells me is, this breakout basically didn't happen. Everything was set up, everything lined up. The Qs were strong. The Qs did sort of what they needed to do. The Qs are still strong, but the SPX could not get anything going. And at this point, I am looking here at this daily chart and thinking, could we be setting up for a very big sort of head and shoulders reversal thing here with neckline in through here, right? And then within that, we also have potentially a head and shoulders reversal right here. So I am starting to look for signs, look for signals that things could be shifting, that things could be turning. And right now, today is probably not that day, right? With the Qs leading higher, you've got names like NVIDIA ripping higher. You've got names like Google leading the way higher. You've got names like Amazon leading the way higher, right? So I'm starting to look for signs of exhaustion. I'm starting to look for some technical signals. And one of the things that I'm looking at is IYT. Now, some of you may have heard this in the past, is that transports, the IYT is the iShares Trust Transportation ETF, is that transports can be a leading indicator. Well, we have a big weekly squeeze here in the transports, and we've got this trend line. The momentum, as you can see on this weekly squeeze, is headed lower. And I'm looking at this and thinking to myself, hey, you know what? If this breaks, could transport start to lead the way lower? That combined with the potential head and shoulders tops that I just mentioned in the SPX has me looking potentially sort of to the downside in the market, right? So what I am doing now is I'm looking at the SPY and thinking, okay, well, let's figure out where can we define our risk. And I think it's pretty easy to say if the SPY breaks over these levels here, we'll say 417 or so and the SPY, that would be a great spot to say, okay, well, the bulls are still in control. This thing is probably heading higher. If, however, the IYT rolls over, if the S&Ps can start working their way down here, then all of a sudden what I'm looking at is the potential for a move lower in the SPX. And don't forget, we have a gap here around 40, what is this, around 402. We also have a gap down and through here, a big gap back in late March, I believe it was. And that gap is all the way down here at 396, sub 396. So if this comes to pass and we start to look down there, that is a move of, $15 lower on the SPY versus a risk of about $5 higher on the SPY. So if we were to stop out, it'd be about $5 above. If we were to come down to these targets and close the gap, it's about a $15 move. So what I'm looking at is on strong days, as long as we, stay under 415, 416, shorting the SPY by buying puts. Now, there's lots of different ways you can do this. Lots of different ways. You can buy put debit spreads. You can sell call credit spreads. But what I'm sort of looking at is just going out here into the end of June, the June monthlies, and looking at maybe these 410, maybe the 415 puts, something like that. Again, if that's a little too pricey, a $9 put is a little bit too pricey, you could buy the 415s and then sell like the $400 puts and do like a put debit spread, something like that. If you wanted to do it even cheaper, you could just come out here to end of May and you could sell a call credit spread. That's a very simple way to do it. You could sell the 415 calls and buy the 417 calls, and that's going for a net credit of 86 cents. You get almost a 1-to-1 risk reward ratio, and you've got $3 or $4 of cushion. So if the market falls, that's a pretty straightforward trade. Okay. So anyway, that's what I'm looking at, is actually a short in the SPY, defining my risk, up in through here around this 416 level, and anything under this level, just looking to short this and then looking to see if this ultimately can roll lower. Note that we also have a daily squeeze here on the SPY, We don't have a momentum shift to the downside yet, but if we get that, I will be sort of, loading the boat short, so to speak, right? So anyway, that's what I've got. I hope it helps. And if you have any questions or need anything answered, just let me know and I'll try to hit that in the next video update. All right. Talk to you guys soon. Later.